Welcome to Illuminati Silver. We tell it the truth about silver. Today is Saturday the 27th of June 2020 and we're publishing our gold and silver weekly update for the week ending the 26th of June. Gold rose $28 last week from $1,743 to $1,771, having hit a high of $1,779 and a low of $1,743. In sterling terms, gold finished the week at £1,435. That's up £23. And in euros, it closed at €1,578. That's up €19. Silver rose 20 cents, from $17.60 to $17.80, having hit a high of $18.09 and a low of $17.46. In sterling terms, it closed at £14.43. That's up 17 pence. And in euros, it closed at €15.87. That's up 0.12 euros. The gold to silver ratio rose this week from 99 to 1 to 99.5 to 1. Now the Dow Jones closed on Friday at 25,015. Down 730 points on the day and down 856 points on the week. The S&P 500 closed at 3,009, down 74 points on the day and down 88 points on the week. And the Nasdaq closed at 9,757, down 259 points on the day and down 189 points on the week. Now Brent crude closed at $41.02. That's down $1.17 on the week, and WTI crude closed at $38.49, and that is down $1.26 on the week. The dollar index stands at 97.43. That's down 0.19 points on the week, though it had been quite considerably lower earlier in the week. Now, we concluded last week's update with the following words, quote, "Silver prices, though having fallen to $17 and momentarily just below, recovered somewhat, forming what technical analysts call a hammer. This is quite bullish, and we should not be surprised to see $18 again tested." So, once again, we're still sticking with our trading ranges as mentioned at the start of this video, but quite likely this week we may see the upper ends tested more than the bottom ends. Unquote. So just as a reminder, these ranges were as follows: gold 1600 to 1800 outlier, and a tighter range of 1650 to 1750 as a general movement. Silver at $16.50 to $18.50 as an outlier, but the most likely range between $17 and $18. So as we can see, gold has marginally surpassed the upper end of our tight range, but have kept well within our outlier range. Now, this past week saw gold break out somewhat from its consolidation and actually reach a new 7-year high, and rising in the end some 1.6% on the week. Now, from a technical point of view, support is seen at $1,746, the 50-day moving average, and below that at $1,720, which represents the 10-day moving average. There are two resistance levels below 1800, the June high of 1779, as reported earlier, and the August 2012 high of 1791. Now, whilst this flies in the face of technical purists, we suspect that there is so much going on geopolitically. The real resistance test for us is $1,800, and frankly we do believe that traders will be attracted to that level like a magnet, using any poor economic news to push it in that direction. Having been a trader oneself, albeit as an independent, that psychology is truly hard to resist or defeat. Now, however, strictly speaking, though, with the fast stochastic generating a crossover sell signal at a reading of 84, and just to remind those who don't follow this too closely, 80 is the sort of level beyond which anything higher suggests selling. a correction short-term may be expected. But that said, the medium-term momentum is positive. Now, for those purchasing gold in sterling, will no doubt have noticed that its current price of £1,435 an ounce is only £23 off its all-time high. And we certainly expect this to be reached, if not this week, then in the month or during the month of July. Again, an irresistible target for traders. Now, all that said, we have also noticed a move again towards the US dollar midweek onwards by investors, which is why it has strengthened a little. It was considerably down at the start of the week and managed to nearly recover its opening price. Not quite, but very close. Now, we did say last week that we could expect to see the dollar index slowly rise back up to that 98 level, and we're still, quite frankly, of that opinion. Now, so the downside for gold could see it fall as low as 1720 and the upside close to 1800. But if it does surpass 1800 and holds, it could then quickly move towards 1850. Though we do suspect it would take some considerable time or an event to push it above that 1800 this week. So a considerable event would probably have to occur to see it jump and hold above that level. Now, silver has moved quite a lot this past week, again testing that $18 level at least twice, but failing to hold on to gains. Technically, we have strong support at $17 and resistance at 18. But again, we still like our outlier levels of 1650 to 1850 and do not really expect silver to break out of this during the coming week. July may be a different kettle of fish, though. Now, if we do, though, if we're wrong and silver holds above $18 and then gravitates towards 1850, then we can see a $19 peak in July. But we're not quite there yet. Now, last week, we saw some positive economic data in the guise of the flash market manufacturing and services index, plus new home sales. Consumer spending was also higher in May than in April, while inflation showed a positive 0.1% growth compared with an April 0.4% decline. The weekly jobless figures, though, are still of concern, though marginally down from the previous week. So looking forward now to this coming week, we have quite a considerable amount of important economic news being announced, certainly for the United States. On Monday, we have the pending home sales index for May. Tuesday, Chicago PMI for June, and the consumer confidence index for June. Don't miss that. That's moderately important. But on Wednesday and Thursday, quite a host of data. Wednesday, we have the ADP employment report for June, which will give us an indication to the non-farm payrolls. We have the full market manufacturing index for June and the ISM manufacturing index for June. We have construction spending for May, motor vehicle sales for June, and of course the FOMC minutes, which no doubt most analysts and journalists will be watching or reading quite closely, though we suspect most has already been revealed by the Fed chair. Now on Thursday, the non-farm payrolls for June, unemployment rate for June, average hourly earnings for June, weekly jobless claims and factory orders for May. And Friday there is an Independence Day holiday. So most of the action is on Wednesday and Thursday, with attention being directed towards the 3 jobs reports, which, with the recent openings of businesses, are expected to show a reasonable improvement. Though we are still of the opinion that only around half of the jobs originally lost will be fully reinstated by the time of the presidential elections in November. Now, there are some quite serious geopolitical and economic issues which we should take notice of, particularly over the next few weeks. The first is that Dr. Fauci has announced that the US has a serious problem with the COVID-19 virus, as infection rates have risen dramatically in 16 states, leaving some to freeze their reopening plans. And Texas has now just recorded its highest ever infection rate of 40,000 in a day. 2. Political relations with China are slowly deteriorating further as the US imposes visa restrictions on certain officials. And 3. The Federal Reserve has warned that America's biggest banks could be hit by losses of up to $700 billion in a severe downturn due to the pandemic. Now, whilst we're fully aware that most of us will not lose sleep overnight over that, we should be a little bothered by this because it could have a severe effect on lending criteria, which are supposed to be relaxed somewhat to aid those seeking funds because of the pandemic. There is undoubtedly a danger that the banks may restrict lending to a certain degree, in which case that will then have the knock-on effect within the economy. So all in all, we have a lot of information to digest and issues to take account of. We believe they will still prove positive for gold and eventually for silver, and so we are comfortable in buying on dips, providing premiums are reasonable. And on that note, there is now considerable evidence to show that gold premiums in the main have fallen quite dramatically. Not quite still at the levels of pre-COVID, but they have fallen. And silver premiums are heading in that direction, though they still have a little way to catch up. Now finally, before we go, it's worth mentioning that this past week we have produced videos every other day, rather than perhaps every day, which is what we've been doing previously. The reason for that is there is little point us producing a video for the sake of producing a video. We're very mindful that some do this because it not only keeps their supporters active, but it engenders Google AdSense revenue. And of course, in times of economic strife, the greater the revenue, the more that any losses are compensated for. In our case, our viewership is relatively modest, and therefore this is not the incentive for us producing these videos, quite frankly, but is more geared towards us providing information as and when we believe it is relevant to you, our subscribers. Meanwhile, do share your thoughts. I'm conscious we haven't responded to quite a few of them in the last few videos, but we will certainly make up for that. We have been tied up with some economic negotiations, private ones, and that has taken a little of our time too. But rest assured, all of your comments are still read and taken account of. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting that we update our Richard and Greg channel every few days, and so if you haven't already done so, please subscribe to that one too. And we trust and hope, as always, you have an enjoyable, safe weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.